this is the first year that we've tipped over to being over a third of the companies that are represented in the data set are solo-founded companies.
Yep.
That's crazy.
Hello, everyone. Welcome back to the Data Minute. My name is Peter, head of insights here at Carta. And today I was joined by Julian Weisser. Julian is a multi-hyphenate around here in San Francisco. He runs ODF, the On Deck program, where interested, excited would-be founders can get together and explore ideas, maybe meet a co-founder. But he's also founded something else called solofounders.com. When you go to Solo Founders, you see a manifesto from Julian saying that solo founders have had their moment now. It is time to bring solo founders back into the startup ecosystem. It's time to invigorate them with capital and ideas. And together, we actually created a big report on how solo founders are doing in venture capital right now. So we're going to dig into that report. We're going to talk about why this is a special moment for solo founders and why, if you're on the sidelines and you can't find the right co-founder, it might be time to go it alone. Let's jump into the conversation. Julian, thank you so much for coming into the studio, man. Really appreciate you being here.
I'm excited to be here. This is a culmination of quite a bit of work by both teams.
Indeed. Yeah, it's been a while, man. I'm wondering if, before we kick things off, you are a multi-hyphenate in the venture community, running On Deck, now solo. Give me like a little bit of background on how you got here and why you're so interested in solo founders in the first place.
Well, yeah. So as you know, we've been partners on the stuff we've been doing with ODF and On Deck for quite a while. And we started ODF with this premise of, we think that there are far too few people making attempts at starting companies and exploring starting companies. And our mission with ODF and all the things we do is to help more people start the best companies. And with ODF, which is our first place, which is a community for people exploring what's next, we said, we think that there is this sort of false belief that the only great co-founders can come from people that you've either gone to school with previously or you've worked with in the past. And if that's the belief that people have, then that's a very constraining belief.
Definitely.
Because you might not have an amazing person that you worked with or you went to school with who's ready at the same time to build a company with you, or even the right co-founder for you. So if you believe that to be true, you're ultimately impaired from starting a company. If you don't believe that to be true, where do you go? Right. And that's why we created ODF. And that was a place where people could potentially find collaborators and co-founders. We're 6.5 years into that. We actually just, we're recording today and we, this morning we released the top companies of 2025 for ODF. And there's so many companies on that list where the co-founders met. But here's the other thing about that. Many of the top companies are actually solo founded companies. And the thing that we noticed with ODF wasn't that there were just great co-founder matches happening, but also people were joining the community because they realized that if they could be a part of a community, they might be able to have a little bit more help if they were deciding to be solo, if they were intentionally being solo founders. And through a bunch of other work that I was doing sort of outside of ODF, I really came to love working with and supporting solo founders. And I just felt like that was a very underestimated group. And if our mission is truly to help more people start the best companies, we need to challenge this notion that the only way or the best way to start companies is with co-founders. It's not to say that you can't have an amazing co-founder who actually helps you so much in terms of making your company successful. That was the premise of ODF, and it's proven out. But it's to say that you want to have only amazing co-founders or you want to be solo.
Right.
And if you believe that the only way you could start a company is by having co-founders, then you might force a fit when it's not there. I call this co-founders of convenience. People who you're starting a company with because you think that you need to have a co-founder either to appeal to other people or because you're self-conscious about being solo. And our goal is to say, hey, you can go and look for a co-founder. There are places to do that. ODF is one of them. But the other thing is consider solo as a valid path and really consider whether or not you need a co-founder right now or whether or not you just need to get going.
What do you think is in the air, or why is it that so many people assume a co-founder is necessary? What pressures are they responding to?
So it's interesting. I mean, I think that it generally falls under what I describe as the denominator delusion, which is we look at all the most successful companies and we say, oh, well, most of them have co-founders.
Right.
But we neglect to look at the least successful companies, all of the failed companies, and then we see, oh, wait a second, there's so many failed companies that have co-founders. So we only look at the numerator, not the denominator, and then we have a false interpretation of the scenario. As it turns out, solo-founded companies have had a lot of success over the years, and it's not a new phenomenon. Everything all the way back to Dell, for instance. There have been lots of great solo-founded companies, but they've always been a minority. So our goal is to essentially highlight the idea that you can be solo, and that you can go and do it. But ultimately, you're right. Like there is this belief that exists, and I think it's just because we see the most successful companies, and in terms of the raw numbers of successful companies, most of them do have co-founders.
Right.
And I think that that's a reasonable thing to sort of draw that conclusion, though I would argue it's a sort of a false conclusion.
Do you think, I'm totally with you on this idea of looking at the successful outliers and then trying to work your way back to something that isn't actually true on the ground when you're starting companies. Is there also a part of this where venture as an industry and VCs in particular have just, I don't know if it's prejudiced against, but they're just like, they have less time for solo founded companies, or they have in the past because of whatever hangups they had about, oh, this is going to be really hard to do alone. You don't have a complementary skill set, et cetera. Like, how much of the trying to appease investors do you think this is taking shape?
Well, I think that many of the best investors understand that you should be breaking conventions oftentimes. But I think that, in many ways, people pattern match, right? And pattern matching is a good way to get average outcomes, but it's usually a good way to miss sort of the edge cases. And oftentimes the edge cases can be extraordinary outcomes. I was just actually looking at some conversation between Tyler Hugg and Honam on X earlier, and essentially the gist of it was, yes, like there are lots of competitive deals out there for venture, but the reality is most of the best returns do not necessarily come from the most competitive deals in the early stage. Yeah. It's less correlated than I think most people would like to believe, and I think that's important to remember. I also think that oftentimes people are often trying to talk themselves out of something when it comes to VC. They're trying to come into something and try and find a reason to not invest in a company. I think that that's generally the attitude that a lot of investors have. And, ultimately, this is just an easy way to talk yourself out of something. Well, they're only by themselves. Can they really accomplish that? And I think that's a fair question, but I think that it's a thing that ultimately probably gets in the way of making good investments. Yeah. There are all sorts of other reasons that people talk themselves out of things, but I think that solo is one. I think it's going to decrease over time. I think that's partially due to technology, just as an enabling layer that helps people accomplish more with less. But I also think that it will be a role model thing, right? Once you start to see more and more of these successful solo founded companies, I think that will be something that really drives a lot of investors to the category of solo founded companies.
And you just grazed by it there, but is the moment that we're in right now with the AI wave somehow even more impactful for solos than it would be for others? Do you think that we're at like a stage of unlock for solo founders?
I think we are. I think that the funny thing though is, and we can talk about sort of the report that we worked on together, but I think the really interesting thing is it doesn't really feel like the technology is the main thing. It feels like it's just this sort of latent sort of energy that's being unlocked. I think that a large part by what we're doing, but also a large part by all of these solo founders who inspired me to actually launch Solo Founders. So people like Celine Haliwa from Loyal, Paul from BrowserBase, Adil from Magic School. These founders really inspired me to say, well, look, these founders are doing great. And I think that there could be more of them. Yeah. And the thing that really gets me about the co-founder stuff isn't that I don't think co-founders are amazing. We've already talked about how ODF has done so much to help people find incredible co-founders. It's more that when you think about just how many companies have gotten started that have not reached their potential, and you think about how many of those failed due to co-founder blowups, it makes you wonder how many of them might still be around and actually fulfilling real problems, solving real problems in society, and also helping people realize their dreams and their ambitions. And you can't know the counterfactual, obviously, but it does make me wonder. Some of those companies that failed due to co-founder blowups could be around and doing really good work in the world. And then, of course, think about how many companies weren't even started because somebody believed that they needed to have a co-founder. And they said, well, I'm not going to force a fit and start a company with somebody who's not a fit, which is a smart move in the co-founder perspective, but ultimately a company doesn't get started. I think that's a tragedy.
Totally. It's a smart, but it's a limiting move, right?
Yeah.
Because if you think that that's your only path through it, of course, I'm going to wait for the perfect person, and I might always be waiting. So it's kind of a waste of latent potential. On the data side, before we jump into the solo founder report specifically, that point around co-founder split ups, I'm always consistently surprised at just how underratedly common it is to suffer a co-founder blow up and have somebody leave the company. 2, 3, 4 founders, a quarter at least of those companies are going to lose a co-founder in the first 3 or 4 years. That's a huge deal. And it's a rearrangement not only of the responsibility within the company about, oh, I lost my CTO. Now I or someone else has to take on engineering. It's a breakdown of morale too, I'm sure, in a lot of those places where they go, oh my gosh, the people who I was trusting are having difficulty trusting each other or something's going on there. Am I really at the right place? So I think it can be a moment of real uneasiness for the rest of the company, let alone just the founding team.
It's destabilizing,
Totally.
right? And I think that the reality with co-founder breakups is everybody imagines that it's not going to happen to them. But statistically, it's highly likely to happen to them. And that's not to say that you shouldn't try to have a co-founder relationship, because sometimes even though co-founders phase out and they don't end up being part of the company the long term, they still can be incredible partners for the time that they're there. I was just talking to Charles Hudson, who is a friend and an investor. He has a fund called Precursor Ventures, and he's invested in about 500 companies across all the different funds. So he has a very good sample size. And he says that he estimates between a quarter and a third of his companies actually have a co-founder leave before the Series A, which I think matches somewhat with what you're seeing. But I think it's always interesting to hear the large data set from you at Carta, and then maybe a smaller sample set from a specific investor. And I think that that's just such a common occurrence. And sometimes it's fine. I've talked to many founders, especially when we were talking about putting together this report, who are solo, but maybe had a co-founder for a month or two at the beginning or a couple of weeks. And sometimes that ends amicably. Sometimes that blows up in a really horrendous way and sidetracks the company. So, I think it's pretty common for people to have these breakups. And I think that the real question is, how many of those breakups are destabilizing? And should you have gotten into these co-founder relationships in the first place?
Right. Were you doing co-founding for the right reasons originally? Or again, to your point, did you feel sort of hemmed into it, pushed into it because that was the only way to start a company? We're big fans of Charles at Carta. But I think that one of the points that he's made before, which I think is really interesting, is there are moments along the company building journey where that interpersonal relationship either strengthens or breaks. And you're going to run into these periods of challenge. And if you are not 100% aligned with that person, the destabilization that comes from that misalignment can bleed into other parts of the company. It's not just like contained within the C-suite and nobody knows about it. It can kind of like infect other parts of the business.
So two of the longest, or one of the longest running companies, two of the longest collaborating co-founders in ODF is this company called Contra. And the founders, Gaius and Ben, they've been working together for, I guess, 6 years now. It's very crazy. And, they met during the pandemic, ODF 3. And, they are the types of founders where I'm sure when things are going rough for one of them, the other one helps pick the other up, because no matter what, even if you've got a company that's doing really well, there are going to be tough times. And, I think that they're the type that can lift the other up. But I think that the reality is oftentimes some of the biggest challenges at companies are not not the one that the other co-founder can lift you up from, because they're the one who's actually causing the tough time.
Right.
So ultimately, you'd be so lucky to have a co-founder like Ben has with Gaius at Contra, but the reality is very often that's not the case. So you should really make sure that you have that type of relationship and not some type of relationship that's mainly due to trying to like force a fit, sort of check some boxes or something like that.
In your many conversations with all these solo founders and founders considering being solo. What's the temperature or what's the general thinking about bringing a founder into the business more than a year or 2 years after the company has already been started? So like I hear this a lot of, well, I'm considering bringing in a later co-founder. The big question that I get is how much equity should I short them? But I guess that there's a question before that, which is, okay, if you've been working on this for 2.5 or 3 years, what does adding a co-founder do? Like that is a special title in a way. So like, how do the people that you talk to think about adding that late co-founder?
I think that, well, I haven't talked to anybody specifically in the last month or two about this, and it's come up really. I've had one conversation where a person had been working on an idea for maybe half a year. They brought on a co-founder who was originally an employee, sort of the first employee. They made them a co-founder. And I think that the reality was that it was very difficult for that other person to change direction with the company. They really didn't want to shift to the new direction that the company, the CEO, the original founder, thought that it needed to go in. And it was emotionally painful to have that break. I think it was a lot more emotionally painful to have that break when it was somebody who had become a co-founder than when it was somebody who would have been just a first employee. I think that would have been probably less emotional for both parties and probably less difficult to move on from. The company, to everyone's credit in that scenario, the company is doing phenomenally well, and both of them are still good friends, but it was still a very trying time. There's another story of this where an investor told a founder that I know that they needed to have a co-founder in order to get investment from them. There are some investors who really push this narrative that you need to have a co-founder or we won't sort of let you in or invest in you. And so they brought a great person on. They brought this person on who is CTO of their company. And it's a very deeply technical company. And they maintain that the pressure of being a co-founder was the thing that actually drove that person to need to leave. But had they just been a CTO, they'd still be there today contributing to the company. So I think that there's part of what you were asking was, what do you think about bringing people on sort of as late stage co-founders? I think the other question is, do these people even really want to be co-founders? Or are they kind of being pulled into the co-founder role because you as the other founder, the first founder, think that they might want that or deserve that or need that? In this person's case, it was because an investor told him to. Yeah. But I think that it's the same story, right? That it's much better to think about what is good for the business and does this person really want or need that? Because it's sad. That person, again, this company that I'm talking about where the CTO had to leave because they didn't feel the pressure of being a co-founder and CTO was too much. The company's doing well, but it was obviously difficult to have a co-founder and CTO transition out, especially knowing that the CTO would probably still be there.
What do you think about, this is a complete non sequitur a bit, but what do you think about the idea? I'm starting to hear it pop up amongst, candidly, mostly just VCs at the moment, that being a founder today is too high status. At least in San Francisco, where it's like, being a founder is cool, right? Yeah. Like if you're graduating from Stanford, it used to be like, okay, am I going to go work at McKinsey? Am I going to go work at an iBank? And now it's, well, maybe I'll go to YC, as though it's just like a standard career path. How do you think about that subject?
I mean, it's interesting, right? Because I would say that something becoming high status could attract some people who are maybe a little bit scared about doing something that's countercultural, right, but could still actually build great businesses and solve important problems, especially if they have pressure from relatives or something like that, and not having that sort of perception of what they're working on could create such incredible turbulence in their personal lives that they might not actually be able to go and pursue that. So I think in some ways that's the positive side of it. I think that the negative side of it is that once something goes from, I call it from odd to ordinary. Once something goes from odd to ordinary, you start to see just a lot of, the common term now is slop. Yeah. But I think that you could look at this from any sort of field of interest. I like to think of it, from the music industries. I used to, or I still play music, but I went to school for music. I didn't go to school for technology. And, I think about how Bob Dylan is this incredibly important, influential artist. And I think about how many people have just created such generic slop after Bob Dylan, because he sort of made this thing that was, he made sort of folk music and singer-songwriters high status, and because he's so famous and all of this, and he was looked upon very positively. And then, you start to see all of this generic kind of crap come out after it. And I think that that's often what happens with startups. Again, I think there's the positive side of it. I think that the main thing is it doesn't really matter if you are doing the thing for what you think is the right reason because you really want to go and solve a problem in the world, or if you just don't have to spend time with those people that you think are building, crummy things. I think it's easy to be cynical about the entire industry. I think cynicism is more of a self-harm thing than you're actually like doing anything positive in the world. But I do think that you have to be aware that you should be more precious with how you spend your time, who you spend it with, and also be aware that there are a lot of people who are doing this for different reasons, and some of them will be good. I think that just general awareness of startups as a path is something that I'm a big fan of, right? Because I want to help more people start the best companies. So awareness is certainly important. But, right now, I think this is actually a really interesting point about sort of it being high status. Solo founding today, right now, is not high status.
Correct.
It might be 6 months from now or a year from now or 2 years from now, right? And at that point, I think it's going to be a lot harder to discern. Right now, though, when I meet solo founders, there's really two types. There's the one that I'm really excited about, and there's the one that they just couldn't convince anybody else to work with them,
right,
or they just don't really know what they're doing, or they're not really serious. But look, it's very easy to split those groups apart. And the ones who are serious, I have a very high degree of confidence in them as a set, because they're choosing to go against the grain about something, which means that they will choose to make decisions that they think are best for their business, regardless of what other people might think.
Yeah.
And to me, that is a really important sort of value for a founder to have, not listening to generic advice, but picking and choosing what they think is important for them.
It's such a good point to say you're going to be inundated with advice and you need to selectively ignore a lot of it, probably maybe even most of it. But the other point that I wanted to double down on that you mentioned is the reason that whenever I'd heard that from VCs about the high status thing, it kind of irked me, is it's like, well, don't gatekeep this idea of founding. You can't really look into somebody's heart or mind and say, this is the motivation for it. And sure, when you clearly recognize in someone a grifter attitude or a lack of seriousness about what they're doing, you just don't spend time with them. And that's fine, right? And that's going to be a lot of people, and that's okay. There's no need to be like, well, only this one needs to be the most difficult thing that anyone's ever done, and then two, only a certain class of iconoclastic misfit can do it. I think that's silly, and it's just kind of it's leaving great companies on the table.
I mean, let's be honest though, like how many VCs are doing it because it's high status?
Well, there you go.
I mean, quite a few, right?
Sure. Yeah.
I don't think that most people truly ever felt that they had a calling to be an investor. I think that some of them did. Obviously, many of the best ones did. But I think that, Paul from BrowserBase said that starting a startup, being a founder, should be sort of a last resort. And Celine Hollywa from Loyal, she said in the past that, she would have done something else that would have helped essentially get a longevity drug to market if she thought there was another path.
Yeah.
She wasn't married to being a startup founder. In fact, I think that it seemed like that was sort of, again, a last resort type of thing. And she thought this was the best path to be able to accomplish the thing that she wants to see happen in the world. Don't really think that's the case for most VCs. I think a lot of VCs are not doing it for necessarily the right reasons. I think that they're just doing it because they think it's high status, think there's a lot of money to be made, and they're right about both of those things. But I think at the end of the day, the water goes out or whatever, and we see who's standing and who's actually a good, who's naked, who's a really good VC or not.
For sure. All right, let's pivot a little bit into this report that we created together, because I'm super psyched about it. So I think as a bit of context, you came to us with this idea for this report, and Hamza and I on my team were super excited to work on it with you for two main reasons. One, it's a beautiful example of like one qualitative lens on top of a quantitative set of data, where you say like, who are these people? And then how does the who adjust what happens? And maybe it's correlation, maybe it's causation, and it's kind of tough to suss out, but it's a great like filter on the top of that. And the other one, which I loved, is that it was so clear that you all had this passion for solo founders because not in any way denigrating the way that things are, you just felt there was a class of founder that was being systematically ignored.
Yeah.
Because they weren't fitting to the pattern. So as we put this data together, what stood out to you from this report? Or what do you think were the findings that you found the most interesting?
Well, what I came to you and I said, hey, we should do this report. Frankly, I didn't know what to expect with the results. I didn't know what we would look at because we weren't doing this because we thought there was some trend or we thought that this was like the perfect moment to start solo founders. We kind of came up with the idea of solo founders through our own experiences. And we said, okay, let's do it. We think this is something, if we want to help more people start the best companies, we think that solo founding is the way to do that. We've already done the co-founder thing. We've already done the exploration thing with ODF. We continue to do it. The 27th cohort is next year. It's crazy. 27 cohorts.
That's wild.
But, we looked at that. We said, okay, well, let's do it. And when I reached out to you about doing this, because we do so much together with ODF, I really thought that we would be just essentially creating a benchmark of what does it look like today, right? And we could also trail back a few years to look at the historical, but really just wanted to get a timestamp of what does it look like today. And I didn't know what was it going to look like today, right? Because again, we weren't doing it based off of, I wasn't doing any sort of quantitative analysis about whether or not we should launch solo founders or what the TAM was for solo founders. But
not a very good pitch deck, Julian.
The thing the good news is I didn't need to have a pitch deck.
Correct.
Right.
Yeah.
I think that when you get started, you shouldn't have a pitch deck. I think you should go off of the thing that you're interested in. And if you find a thread that's worth pulling, then maybe you go and you talk to investors or something like that. But ultimately, what was absolutely fascinating to me was we actually seemed to have hit it at this very special time. Because if you look at the first chart, the main chart, I would say, about the entire report, and the report goes very in depth on a lot of different areas,
For sure.
but the main chart really talks about this one idea, which is solo founded companies, how much of what percentage of all companies getting started, and the proxy here is companies that are on Carta.
Correct.
What percentage of them are solo founders? And you look at it, and it's a very distinct increase from 2019 to today. But I think the thing that's most sort of incredible about it, to me at least, was we couldn't get, obviously, the numbers into the future for the end of 2025. So we're only looking at the first half of 2025. And this is the first year that we've tipped over to being over a third of the companies that are represented in the data set are solo founded companies.
Yep.
That's crazy,
Yep.
right? Especially when you look at it, and I think it was 23% in 2019. So it's a pretty big increase.
Yep.
But I think that there's this almost perfect sort of it's just very beautiful that this year we tipped over and went to over a third.
Right. Is there a when we pulled this stat, we of course then went to the other side of it and we looked at the stat that shows, okay, what percent of solo founded companies get funded?
Yeah.
And what percent of them even want funding, which is an intention thing that we're not able to really suss out from the data, but I'm sure that would be an interesting parallel statistic as well. On the get funded side, it's not 36%. It's probably in the high teens, low 20s. And I wonder, as you have been touring to go and find solo founders that can be commentary or lend credence or color to this report, I'm wondering if you've spent a lot of time with VCs as well and asked them if their opinions are changing.
I mean, opinions are a wild and ranging thing. What I've found is really fascinating is, one VC that I absolutely love. They're on the Midas List. They're somebody who I've known for many years. When I first told them that I was launching the Solo Founders program, which is sort of the first offering that Solo Founders has, other than the report, which is something new. I said, I'm doing the Solo Founders program thing. Here's the reasons why, and they just took a beat and they said, I've never really been that excited about solo founders.
Right.
And I was like, that's interesting, because maybe 5 years ago, I would have felt very concerned about that. But now I feel really good about that, because now I just know that I'm going to be able to prove you wrong. And I know that investing and not just investing, but believing in something, you're going to have to believe in something before other people believe in it sometimes. And I'll remember when I was sending people Celine's company, Loyal, and a few people that I really, really liked were not interested in investing. And this is very long ago, and it was when I was really starting to send companies to people. I hadn't really done a whole lot of that before. I was pretty distraught at the time because I was like, I don't get it. Why don't they like this company? What's going on there? Because I think it's great. I think she's just an incredible person. I think that the vision is insane. And, ultimately, all of those people have told me that this is like, wow, I can't believe I missed that.
Right.
But the reality is, I think that oftentimes it is normal for people to miss things. There's things that I'm sure I'm missing. I think that I just see this part of it very clearly compared to most. And so that to that investor's credit, I introduced them to multiple solo founders from the program, and they asked to invest in all of them.
There you go.
So there you go.
You've won an advocate.
They changed their mind, and I think that's great, right? Because I think that that's what the great investors do.
Definitely. One of the data sets that we look into in this report is around solo founders, how they hire, how they build teams. I am personally not in any way really a fan of or think the idea of that one-person billion-dollar company is super viable, but it's very clear from the data that two things are true. So one, solo founders will hire a team around them, oftentimes earlier than people that are not founded companies, and they can use equity in different ways. That's one of the sort of, I think, hidden arrows in the quiver of a solo founder is, well, if you look at it from a logical perspective, you have an extra 30 to 40% of equity that you're not splitting with one of your co-founders. So how do these solo founders think about team building, or do they think about team building very differently than the co-founded companies that you've talked to?
I'm really happy you asked because, when I was first setting out to launch Solo Founders, I wrote this entire internal memo, and I think I'm going to release it at some point soon. But one thing that I said was that I feel like solo founding is almost as important of a structural innovation to startups as the C Corp. And what I mean by that is that everything functionally changes in terms of that decision creates a tree of other things that wouldn't have happened otherwise. Hiring takes place in a different way at a different time. Fundraising is different. You're thinking about valuation and dilution differently, or at least you have the ability to.
Sure.
All of these decisions, and then also the decisions that the founder makes, they're no longer making them with another co-founder involved. That changes the decision styles, and it changes the speed of decisions sometimes. So all of these things kind of compound, and it makes a fundamentally very different type of company, which isn't to say that, again, co-founded companies with great co-founders are amazing, but you actually just fundamentally have a different type of company. And what we've seen is, your data has it, but also when we talk to solo founders, they're hiring people earlier. Of course they are, right? Because if you're co-founders, one of the real tricks about co-founding is that I think oftentimes, especially in the past, people thought about co-founders as merely a way to hire people without cash. Right. And maybe if that person, the CEO founder, if they had like $5 million out of the gates, maybe they wouldn't have had co-founders, right? So I think that part of it is that co-founders are sometimes a way of, you give a title, you give status, and you give significant amount of equity as a way of getting somebody on board for an indeterminate amount of time without pay.
Yep.
And I think that is very attractive for both parties, and I get it. But oftentimes, Charles is on my mind because I was just speaking with him yesterday. We've talked to other investors. The thing that he said is that very often it's the technical founder, not the CEO, who leads the company, and very often they end up starting their own companies.
Right.
And I think that the really cool thing about solo founding is, yes, especially in the solo founders program, we've seen mostly technical people be building their companies, but we've also seen so many non-technical founders lead companies solo, and it's just very possible. And even if you are a technical founder, if you are building a company that's ambitious, you probably are very quickly getting away from being the main engineer anyways.
100%.
So yeah, I think it's just very natural that the hiring happens differently, the fundraising happens differently. It's just a different type of company.
And then the last chart that I want to touch on this report, there's a lot more in it, but jump to the end, the punchline to the story, which is ownership at exit. as you might imagine, if you are a solo founder and you make it through the gauntlet to an acquisition or to an IPO, you are very likely to own more of your own company than someone who split it with a co-founding team. This seems maybe, I don't know if it's a less noble thing, but it is certainly one of the questions as we go through all of these venture rounds about how highly dilutive venture capital can be and how long it takes to get to the end. Solo founders kind of come out of that picture looking pretty rosy, to be honest.
I think the other thing is you actually have more room for equity mistakes if you are a solo founder, meaning you can give equity to employees. It vests, but maybe they shouldn't have gotten the equity and they weren't actually performing. You can do more rounds of financing. You can have bridge rounds if you need to, and it's not as painful. I think that you just have a lot more flexibility as a solo founder around equity. And that means that even if you were to end up in the same place as a co-founded company, as sort of the highest owner in a co-founded company, it means that you had a lot of ability to take on more dilution in various ways. And I think that that's really good, especially for first-time founders. First-time founders, that means that they can raise multiple you probably raise, depending on the math, you could probably raise 2 rounds more than a co-founded company before an exit or before, going public.
Yeah.
And still have the same amount of ownership as a company that has, multiple co-founders.
100%. It just, that extra 30 or 40% does lend flexibility to your growth path. Especially if you're taking from venture capitalists in particular, which is, the main focus of companies in the report.
The thing that also comes to mind around this, that I've talked with most of the solo founders about this, is this idea of authorship. Everybody talks about ownership and ownership levels. And at the end of the day, or at the beginning of the day, I should say, when you're starting a company, you have 100% of your solo, 50-50-ish. I know Carta has very interesting data that it's not actually 50-50 usually, but just say 50-50 for the sake of this example. And you start with 100 or 50-50 or 33-33-33. That is less important to me in some ways than the authorship. Authorship meaning the decisions that are made, the way that the culture is formed. A solo founder is in many ways has the ability to be extremely exacting about all of the decisions that are made early on. They're not an average of the decision of 2 people. And I think the reality is very oftentimes, even great startups have this effect where, co-founders are making decisions together in the early days. Sometimes that's a good thing. Sometimes that's not a good thing. But ultimately, John Andrew, who's the founder of a company called Wander, it's an incredible company, an incredible brand. He talks about how Wander is his soul expressed by a company. And I think that that's often the case for companies, but I think it's even more maybe the case perhaps for solo founders. I think that co-founders, it's more like it's almost like the baby of
the
multiple
soul of
people,
your child.
right?
Yeah.
And I think that that's really beautiful too, right? But I think that there's almost like co-founders might be more like the startups for co-founders might be more like a baby, and the startup for a solo founder perhaps is more like a film or something like that, right? Where it's like they got this very distinctive sort of point of view to it.
Amazing. Julian, where can people learn more about solo founders and the program that you're running and everything that you're doing to support the ecosystem?
Well, we're just solofounders.com, or you can just Google solo founders because we're like the entire front page of Google. Or if you probably type it into ChatGPT or Claude, I'm sure we'll
you got to work on the GEO as well.
We got it already. Yeah. But solofounders.com to keep it simple for people.
That's perfect, man. Thank you so much for coming in. It's been a blast putting this together with you. I'm super excited to put it out to the world.
Yeah, I'm excited that people are probably reading it right now as they're listening.
I love it.